Hey guys, what's up? This is Andrew for TrendLineses.com. So I did a full video on AMC yesterday. Today, guys, is a full video only on GME. A lot of things happened this week. We had a very, very nice bullish development. So let's see exactly what happened and let's see what can happen next. Let's get into it. Alright guys, as usual, we start daily time frame. I'm going to go through the technicals first. I'm going to show you guys how to analyze this situation using volatility, momentum, and volume, and see what levels we might reach this week or next week, where we might see some rejection happening, what levels are good to buy, because I know that this is what you guys are interested in. So as usual, I'm going to just share my view, guys. Let's see if I am right or not, but I'm going to apply the techniques that I think are working well in this type of situation. So what is the situation first? We're in a correction, guys. We're in a correction, or we were in a correction. Let's see, since the November 24th, all right? A, B, C. So this is some Elliott wave theory. And the question we're having is that right now we can see, guys, that bulls are taking back control, right? It's pretty obvious. I mean, you can check the weekly time frame even if you want. And I showed you guys before that we had the first bullish week, green week, since almost 3 months, guys. And right now we have this huge green candle happening after a breakout, guys, after a breakout. So this is looking great. We can feel bulls are back in control. Now let's analyze if they are really back in control. So to know that, we need to understand what technically happened for bulls to actually take back control. And what happened, guys, is a breakout. And once again, I'm building a full course about this method, guys, which is trading whenever you have these bullish signals. And I've been doing that for years, guys. And I can tell you that it's full of traps, okay? The market is full of traps. Some traps are really set by big money investors, especially on stocks like AMC and GME. And they are really not easy to avoid, like those ones we had here before. And some traps are just, natural, because the market is just, you have buyers, sellers, and they just trap each other, sometimes even knowing about it. So here, is it a bull trap or not? To answer that question, we need to check if the breakout is good quality. So once again, I'm going to apply exactly what I'm showing you guys in this course, where I explain how to know if a breakout will hold or not, and if it is supposed to hold, how to enter and how to take profits on your trades. I'm also giving a lot of risk management strategies that you guys can apply to be consistent in your results, because as you know, sometimes the market is moving against you, sometimes it's moving with you. So, you just need to have a strict risk management so that you survive during hard times and you make money whenever the environment is better. So for those who are interested, just click on the link in the description of this video. You're gonna subscribe to the Elliott Wave course that I did 1 year ago, guys. Don't worry, I'm gonna have your email and I'm gonna send you all the information you need to have to get access to this new course that is gonna arrive into a maximum 3 weeks. Just need to finish a couple of things, but I can already tell you guys, it's going to be amazing, and I'm sure you're going to love it. You're going to learn a lot of good information that can be used for trading. So here I'm going to show you a little bit what it is about. Okay, so we have a breakout. We're going to use volume, volatility, and momentum to know if this breakout is a good quality breakout. So first, let's have a look at the volume. So we can see, guys, where is the breakout first? Okay, the breakout is here. Okay. This is a breakout. Why? Because we had a trend line, okay? A trend line that had multiple reactions, 1, 2, but 3, 4, 5, 6, all right? Those small reactions in the recent past is what is telling me that this was a resistance area, okay? Then we break out here. Let's check the volume. The volume is increasing, guys, okay? You can see. But now, is it increasing a lot or is it increasing a little bit? Here it's increasing a little bit, okay? Why a little bit? Because as you can see, it's still lower than a lot of other volumes we had in the recent past. So we have the volume increase, but it's not incredible. First thing. Then, do we have a balance between bulls and bears before breakout? Because once again, I'm not going to go too much into details here, but this is very important. For a reversal to be a sustainable reversal, you need to have this balance that is showing that bears are ready to let it go. If you don't have it, it's probably just gonna, they're gonna keep attacking. So first, you need to make sure they are out of the trade. And here we have this consolidation. It's quite nice here, guys. Okay, between 87 and 115. For like 2 weeks, we had the market that just is pausing here, and you can see that here bears and bulls are neutralizing each other. What I don't like is that it didn't happen on low volume. Okay, so basically this was not really a period of balance. This was actually a huge fight and a lot of volume has been traded. So the consolidation is not perfect until here, the 5 last days before this breakout, guys. Okay, here we have this nice consolidation, very close to the trend line, and it happened on low volume, on decreasing volume, and we reached some very low volume. It's like, everybody was really in a wait and see mode to see what they do. Bulls and bears were not trending. No one was trending. Everybody was waiting for what? For a signal, okay? And the signal happened here. So this is looking great, all right? So for now, the volume is giving me mixed signals, but the volume dynamics is giving me good signals. The volatility, which is actually this consolidation that is here, is giving me good signal. We can also check the Bollinger Bands to know if the volatility has dropped low enough. Here, the Bollinger Bands are not very tight, guys. So it's showing that this, fight between bulls and bears is still on, okay? Whenever it's dropping really a lot, like here, okay, you can see that whenever the Bollinger Bands are very tight, it means that, nobody cares about what is happening and everybody's really waiting. So here the consolidation is not, like I said, perfect. We've seen that before, and it's confirmed by Bollinger Bands that are not tight enough, okay? So volume, so-so, but quite good. Volatility, same, so-so, because we have a nice consolidation just before breakout, but the Bollinger Bands are not very tight. And the last indicator I want to check, guys, is the momentum. So it's the MACD. And we just need to check if the momentum is with us, guys, okay? Because if it's not, then it's probably going to be a fake out. And here, the momentum is going higher, as you can see, but it's not positive yet. The MACD is here. I'm not checking the MACD signal. I don't use that, but I'm checking the MACD. And I like the MACD to be positive. It's not positive yet, but it's going to be soon, I think. So at least the momentum is going on the upside, but we don't have here the momentum going higher. You see between A and C, the momentum is dropping. So we don't have a bullish divergence. So the momentum is giving good signals, but not perfect. So the conclusion is that this breakout is good, but is not perfect, all right? So whenever you have a good breakout that is not perfect, you might expect a little pullback to happen, or, maybe some more consolidation happening afterwards. And here, we are already consolidating. You can see between 130 and 115. This is the new consolidation area. We were here, guys. Now, we just went higher. So next level. And I think we're going to consolidate here with maybe some little dip. Okay. It can happen. So be prepared. I think it's going to be a nice opportunity to buy. If we dip slightly below this 115 level, we have the 20-day moving average at 107. So this is what I think will happen this week. We would consolidate between 115 and 130 with maybe a dip, quick dip to 110, 107. Okay, the 20-day moving average will increase soon. And once again, guys, what I'm showing you here is exactly what I'm going to show you in my course, detailing every entry method you can make. And here I'm showing you a little bit how this is working, but you need to associate, you need to combine fibs with moving averages, with areas of consolidation. Okay, so that's why I'm showing you this example. I think it's very interesting. So in this situation, what I would personally be doing, I would be a buyer here, guys. Okay, just a little bit below this 115 level. Okay, so that if there is here a small dip, I'm gonna be able to get in. And then what can happen, guys? We can expect this breakout to be followed by a continuation on the upside, and probably going at least to this level. So so once again, like we've seen, guys, this breakout is good quality but not perfect. So there is a chance that this breakout doesn't hold. Let's be honest, there's always a chance, but I mean, when the breakout is perfect, the chances are smaller. Here it's not perfect, once again, because we didn't, to me, consolidate long enough. before this breakout. But if it holds and if it's followed by a nice move afterwards, then the usual situation is that we move, you know, higher, we consolidate a little bit, and then we come to the major resistance level, guys, 160. So my view, I'm giving you my view here, guys, because once again, you know, I'm not hiding. Sometimes I'm wrong, sometimes I'm right. You know, most of the time I'm giving you the levels where you can see there is some reaction, and I'm gonna keep doing that, guys. And here my view is that once again, next week we consolidate, maybe we dip a little bit, and then we move higher to the 160 level, maybe end of Feb, beginning of March, something like that. And this would be the major level to break, like we've tried, guys, here. Unfortunately, we didn't manage to do it. You remember, we had this 2 fake outs, guys, here. So let's see, the next one might be the right one. So this is what I'm monitoring, guys. And I would like the price action to come here, consolidate as long as possible, guys, to give energy to the breakout. That's why a good consolidation is very important, because if you don't consolidate before moving higher, you don't have energy, all right? It's like you forgot to put oil in your car before going for a long journey, guys. So if you don't have that energy, the breakout might fade. Okay, so let's see if we manage to get close to this trend line, consolidate, and then break out above 160. So a bit like AMC, guys, I think this scenario might happen in April, May, something like that. But that from now on, I think it should be all right for GME, and I think things would look better. So let's quickly check the option market, guys. What do we have on GME? Bam, bam, bam. So I'm checking the put market, get synthetic short, bam. Okay, so I'm retrieving all the information, bam, 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 bam. Okay, so what do we have? First information, guys, let's check everything. The synthetic short is 3% and it can go up to 23, guys. It's massive. It's huge. Let me check what it was before. You see on AMC, we only go to 15 for now. On GME, we already go to 23. So it means there are a lot of options on the upside, which once again would create a lot of trouble for option market makers that would need to buy very decent sizes on the upside. Okay, so in November, it was closer to 30. So it's still lower than November, but it's huge, guys. 23% of maximum synthetic short is absolutely massive, all right? And we have this 950 strike, 1.2 million shares right now on the strike, so still huge. Okay, so the regular short is still 15%, but I'm using 14th of Jan data. I really want to see if some shorts have covered or not. So I'm going to see next week, guys, when the new regular short will be released. So the total short is 18% right now. I take the synthetic short, I add it to the regular short, so 18%, DTC at 3. Okay, last week, the DTC was at 3.15, so we are in line, nothing crazy. As you can see, GME could go to 5, 6 when it almost squeezed. So we are still far from it, guys. We need to rebuild, you know, everything. And I've been saying for quite some time that we need time. I'm still saying we need time, but right now I'm saying that we reached the low. I really believe that. I mean, if this breakout holds, so let's see, but it looks like it will hold. But we still need more time, guys, to rebuild everything here. Okay, we are not ready to squeeze. It will take at least, I think, 2-3 months, but at least from now we should, you know, stop dropping and consolidate and even go a little bit higher. That's what I think. Okay, so the TC at 3, and yeah, so as you can see, those information is showing that shorts are still, they have of course not covered. It's still important. The DTC is still high, guys. 3 is high. It can go to 6, but 3 is higher already. And let's check the maximum pain for option expiry on Feb 18th. You can see, guys, it's very flat, all right? So it doesn't really tells me a lot. Let me zoom in here a little bit. I don't see well. Okay, I don't see very well, but it seems to be around 115. Okay, so 130, 30 million, 32 million. 120, it's around 120. Okay, so the maximum pain is around 120, so it makes sense, guys. It makes sense. It seems like within next week we will finish somewhere between 115 and 130, so this is in line with my analysis. Okay, guys, so that's it for me today. I hope you enjoyed this video. I hope I managed to explain how I analyze all the information I have on the market. And if you did enjoy this video, guys, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.